OPEC cutting production as gas prices shoot up this week. Job numbers show the labor market is starting to cool, and we take a closer look at the new economic forecast by the World Trade Organization. Joining us this morning to discuss is Executive Vice President of the National Taxpayers Union, Brandon Arnold. Welcome back to the National Desk.
Morning, Jay.
OPEC cutting 2 million barrels a day. Already we see this spike in gas prices this week. Crude oil up 2%. What can we expect, Brandon, in the weeks and months to come?
Yeah, I think what we're going to see, obviously, is higher gasoline prices. And I'm not sure they'll get back to those levels that we experienced in June, where we had astronomical gas prices. But I think something more in the range of 15, 20, even 25% increase in gasoline prices is likely from this decision. And of course, this goes back to the fact that we have not produced enough energy domestically here. We've been saying that for over a year, telling the administration from the outset, we need to produce more domestically to hedge against these kinds of disruptions, but we haven't done so, unfortunately.
Yeah, and at the same time, we're also seeing the Strategic Petroleum Reserve at its lowest level since 1984. Explain to us why lawmakers say this is so dangerous.
To be there in the instance that we have some disastrous event. That means some sort of war or natural disaster that disrupts production in a significant fashion. It's not supposed to be there just to hedge against everyday fluctuations in gasoline prices, but that's what the administration has used it as, because it's been so beholden to Venezuela, Saudi Arabia, Russia, other countries, rather than producing more domestic supply. So now that we've drawn it down, we increase our vulnerability if there is a worst case scenario, some sort of, heaven forbid, event out there that disrupts our energy production. It could leave us even more vulnerable to those kinds of disruptions.
Also, we got some new data this week. The Labor Department showed the number of job openings in the U.S. dropped by 10%. You know, layoffs did also rise slightly in August. These are signs that the labor market's starting to cool. And what does this tell us about the economy, Brandon, and where we're headed right now?
Yeah, this is concerning. You know, we're not seeing negative growth in the labor markets yet, and we'll get official numbers out of the government tomorrow morning. Private sector numbers suggest that we're still experiencing some growth across the board, though we're seeing certain sectors, particularly concerning sectors like manufacturing, mining, natural resources, seeing a decline in employment. That is bad news because it does suggest that we could see rocky times ahead, including a full-blown recession, especially when you couple that with 2 consecutive quarters that we've experienced of negative economic growth. A lot of danger signs out there for a very, very concerning economy going forward.
Yeah, and there's a lot of variables here, right? Because this new forecast by the World Trade Organization shows that surging energy costs combined with these rising interest rates are expected to lead to just a 1% increase in exports and imports in 2023. That is well below the anticipated increase of 3.4%. But it also could show that there's a slower growth and signal easing inflation and this huge risk of this deep global recession. What are some of the key factors you're watching right now?
Yeah, I mean, some of the key factors will be the strength of the dollar relative to other currencies, and we're already seeing a strong dollar that impacts the manufacturing sector. I just talked about how that could have an impact on manufacturing jobs, also manufacturing output. We're seeing some signs that is beginning to level off. That could portend a domestic recession, and the overall job figures, I think, are very concerning. That's something that we'll be watching very closely. The release tomorrow. If we get disappointing numbers paired with negative economic growth, paired with the flattening of our manufacturing output. Unfortunately, that really is a sign that we're probably in a recession or going to be in a recession very, very soon. A recession paired, of course, with inflation that remains over 8%. That's bad economic situation to be in, unfortunately.
Yeah. All right. Executive Vice President of the National Taxpayers Union, Brandon Arnold. We appreciate you joining us this morning, and I hope you have a great weekend.
Thank you. Appreciate it.